This is the DeFi Decoded podcast by 9 Point Partners in cooperation with Prophecy DeFi. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello, and welcome back to another episode of DeFi Decoded. This is Alex Tapscott here with co-host Andrew Young, and today we are joined by Zaki Manian, who is a co-founder of the Sommelier protocol, a Cosmos OG, in fact, a crypto OG. Like me, Zaki has a little bit of gray hair in his beard, probably from being through a couple of market cycles. Zaki, welcome to the show.
Yeah, the drama always puts more gray in my beard.
Yeah, exactly. So we've had a couple of different folks from the greater Cosmos ecosystem on the show in the past. In fact, last week, funny enough, we had Sunny Agrawal of Osmosis. And the impression that we got from speaking to Sunny is that there's just a lot of DeFi stuff happening in the Cosmos world. And it seems almost like Cosmos is having its own sort of DeFi summer, DeFi moment, at least over the past sort of 6 to 12 months. Similar to how Ethereum went through a period of a lot of growth and innovation back in 2020. So can you tell us a little bit about your role in the community and what you're building with Sommelier?
Yeah, so, I've been involved in the Cosmos community for a long time. I'm like broadly involved in like all of the many pieces of Cosmos DeFi. I'm Sommelier is sort of an interesting project because it uses a lot of Cosmos technology. There is a Cosmos chain. You could stake it. Our token is on Osmosis. It'll hopefully someday be listed in other places, but it exists. The chain is connected via IBC to the Cosmos ecosystem. But if you go to app.sommelier.finance, it's an Ethereum app. So let's reconcile all of these different these worlds. So I would say without a doubt, DeFi and Cosmos just generally looks like it's if you look, so kind of the sort of world that has sort of expanded was okay. So for a long time, DeFi on Cosmos. So first we had Cosmos DeFi projects. We have some OG Cosmos DeFi projects like Kava. Got started in the pre-IBC era. But before IBC, most Cosmos things were non-financial applications that were there, things like Akash, etc.
Yeah.
IBC comes to life. Osmosis comes to life. Osmosis is the first big DeFi app, but it's just, it is conceptually, it's a DEX. And, if you're going to have IBC, you can trade tokens. A DEX is the natural first thing. Yeah. But then and then Terra happens. And Terra was this huge DeFi engine. But it was all built around this sort of unsustainable anchor yield. Which was, and the anchor trade. So then Cosmos DeFi was okay, everything was subservient to the anchor carry trade. Okay, so that was the next thing. And super hard. And part of the downside of all of these things, right, is we've not made it. There's been multiple layers in which building in DeFi on Cosmos has been hard. One has been just generally okay, the EVM Evmos took a long time to get built, so you can just bring EVM stuff. So you can just port EVM DeFi, which is how a lot of these ecosystems get started. There wasn't a lot of examples of building DeFi stuff in the Cosmos SDK, so you really had to know how to build stuff on top of the Cosmos SDK. But also you had to compete as a DeFi application with the anchor yield and the staking yield. And we were very clever, back in 2016, coming up with the Cosmos tokenomics, where we're okay, there's staking versus lending. We saw this paradox. We were oh, if there's, DeFi yield. It's going to pull atoms and other staking tokens out. So you're going to build in adaptive inflation. But all of this created this like very high, like what was perceived as like the risk-free yield rates were really high. The way to attract people into DeFi was like with like lots of farming and like lots of initial inflation of tokens. And it was really not, it was sort of a little bit of a hostile environment, I think, is like, and like there were a lot of
that, just to clarify what you mean. So like a lot of DeFi projects were trying to launch with economic models to incentivize adoption, but they were basically competing with like this elephant in the room in UST that was kind of sucking a lot of that capital away. I mean, on one hand, UST was a big engine for, I think, Osmosis's early growth, because
absolutely it was a huge engine,
the leading trading pair with all these other assets.
Yeah, like the anchor carry trade was a huge flow of capital through the Cosmos.
But are you saying basically that there was kind of like a crowding out effect where it was like pushing a lot of other stuff over to the side, something like that?
Yeah, absolutely.
Yeah. Okay.
It was a crowding out effect. There was a crowding out effect there was a crowding out effect of DeFi projects, and like it was a very competitive environment. I'm very involved in launching the Agoric stablecoin IST and the Inter protocol. And we were just like, it was like obviously very nerve-wracking. It was like, how do you actually succeed in this environment? And a lot of DeFi builders. And so over the, the UST was the only natively issued stablecoin. You had to use bridges for everything else. And the bridge ecosystem wasn't very mature. So there was like all of this stuff. And it's like one by one, like all of the reasons that like DeFi was hard on Cosmos have collapsed, right? But like that was the world of like when we decided to started building Sommelier. We started building Sommelier before the Osmosis launch, before Osmosis even launched. We've iterated through multiple different products until we came to the current product, which I want to talk about. But we can just say, even with all that stuff being true, you couldn't really build Sommelier very compellingly on Cosmos in 2022. In 2023, I think that might be a very different picture. So like, why do I think that would be a different picture? Evmos is live, and not only is Evmos live, but there are a lot of interesting variants like Barachain and Canto that are all doing interesting stuff.
Can you tell us why Evmos being live is important? Maybe just like for the
because it means that you can reuse the code base of Ethereum DeFi. If you want to build an NFT marketplace, you can fork Zora, you can fork SudoSwap, you can fork Wyvern and OpenSea. You have all of this code that like was sort of gate kept out of Cosmos that builders can interact with. So that's one thing. So that's like one piece of the puzzle. The bridge ecosystem has become a lot more mature. Axelar is doing a lot of volume. Even the Gravity Bridge is starting to do a reasonable amount of volume, which is very exciting. And we were sort of minimally practical. Evmos was affected by the Nomad Bridge hack, but like, as I think the total exposure was like $3 million in the Cosmos ecosystem. So like as an economic event, it was not that big a deal. And so, so those pieces are all starting to come together. There is a lot more example code out there just in general in the open source of building DeFi products with the Cosmos SDK. There's a lot more example code of building DeFi products on CosmWasm. So there's like just a lot more to work with. This cool IBC feature called interchain accounts, which is kind of like the it's like I would say the approach that in many ways that Sommelier has taken on Ethereum is like a weird cousin to or a weird parallel universe mirror twin of the way interchain accounts works on Cosmos. But interchain accounts is starting to become a more widely adopted feature. So we can talk about why that's a big DeFi enabler, but it's a big DeFi enabler for use cases beyond DEXs. Like whereas with token transfers, the natural use case is a spot DEX. So, you have that. We have the very exciting DYDX coming to Cosmos, which is obviously like a huge thing, just in terms of like kind of, especially I think it's going to show builders like it's going to be like, I'm really hopeful that it's going to be this like, oh, like, okay, like what is the thing I can't build on Ethereum? I can't build on Solana. Now, like I can build this like crazy new user experience. So that's
Zaki, if you were to describe Sommelier, so you're talking about some of the way it's integrated and how it works. Like what is it?
Okay, let's pop the stack, go back to Sommelier. Okay, so let's assume that you have like a fairly mature DeFi ecosystem somewhere on a blockchain, right? You have trading protocols, so you have DEXs that have reasonably good prices on them. You have lending protocols. You have stable coins. You have derivatives. All of this stuff that is starting to be the features of a full-fledged DeFi ecosystem. Well, when we started out in DeFi, which had been like people have been in the crypto world, the OGs have been dreaming about DeFi since like 2015. Like, I remember like Mastercoin meetups and like, Counterparty. Like we were all like, there's this whole prehistory. DeFi took a long time to get ready before DeFi Summer kicked off. So DeFi Summer kicks off, and DeFi Summer is like super like degen friendly, right? It's like just like put your money in MetaMask, jump into it like the wild world of blockchains and make money. Like everything's very exciting. Click, interact with these applications. Yes, it's dangerous. Yes, it's scary. Yes, there are rug pulls and everything, but it is actually like reasonable to make money in this environment. But like that DeFi Summer was obviously going to come to an end. And when we started building Sommelier, we knew this. And what does that mean? It means that
obviously come to an end. Why did
so like this world of super high unsustainable yields like come from a mismatch of demand and supply of capital, right? Where like the capital is not available to service these protocols and to service the demand. So that, ultimately that mismatch. Okay, but as capital got onboarded onto DeFi, you start to the systems start, and then the competition becomes capital efficiency. So we've seen the transition from Uniswap v2 to Uniswap v3. We saw the rise of Curve. All of these things, you see the competition now between like Aave, Compound, and Euler that is playing out. All of these things, there's just like one narrative, which is capital efficiency. So
yeah, there's also a focus now on like real yield, right? Like it's less about inflationary yields. It's about what are the real revenues that are being generated by this product, because those are sustainable.
Yep. So, but like, what does this mean for a participant in the DeFi ecosystem? What it means is that it's no longer like a side gig, right? To use these things, right? It's not like, it's like, oh, I could just like, put some money in a DeFi protocol and forget about it for 6 months and I'll come back and there'll be like a lot of money waiting for me, right? You need this thing. And the thing is, and so this is the world. So then, another piece of DeFi Summer is Yearn, right? Big thing in DeFi Summer was Yearn. And Yearn was like, we will help you put these DeFi protocols together. We will combine DeFi protocols together to give you better returns. So the thing that's hard is like, you could like borrow money from this, you could like do levered staked ETH. You could like borrow ETH from Compound, put it in Lido, sell your staked ETH for ETH, like recycle, right? You could do levered positions, but all of this required composing DeFi protocols, which was also hard. And so Yearn's approach was like, we're going to do that. But also that this is sort of disconnected from the way markets work in real, which is markets are dynamic. Markets are constantly changing. If you find a strategy that like is making money, eventually capital will be attracted to that strategy, and you will be and there will be copycats of that strategy, and yields will go down. This is the nature of markets. So Sommelier is basically a solution to, here's this question: can we have active management without sacrificing the non-custodial and the non-custodial nature of DeFi, i.e., can we have actively managed strategies in non-custodial DeFi? So in order to have a Sommelier, though, you need, Sommelier is built with Cosmos tech, but what it needs to be succeed is a really rich, successful, like rich liquid DeFi ecosystem. Like that's critical. That's what makes Sommelier possible, because we are a layer of active management on top of DeFi. So any DeFi protocol can be composed by a Sommelier strategist to do that.
So that's kind of the current focus on being built on Ethereum to start. You want to leverage the sort of greater liquidity and I guess community of Ethereum, at least at the start. But sort of what you were referring to earlier was that you think in the sort of coming months, Cosmos will be large enough on its own to kind of support this use case completely on its own. Is that sort of informing the decision to go on Ethereum first?
Yep. So what informed our decision to go on Ethereum, and on one hand, it's like we made this decision to go on Ethereum, and we have been building for Ethereum native for a while, and we went through a couple of different, our North Star has been actively managed strategies on DeFi across the entire world of interconnected projects. But like where to launch and where to land has actually took us a long time, because we initially were very focused on managing Uniswap v2 liquidity positions. Then Uniswap v3 came out, and we're like, okay, this is obsolete. Then we spent a while trying to be like, okay, we're gonna try and fill this narrative that like a lot of people have, decentralized rebalancing Uniswap v3 vaults. Then we like build out a whole data science backtesting team, and then realize basically all those vaults lose money. So like we're not gonna, like, this is a terrible product. And so that took us to our initial product, which is the product that's out right now, which is a rebalancing lending strategy, i.e., we will lend whatever stablecoin is most profitable. This is the first product. It's pretty cool, but demand for stablecoin lending is not super high in the bear market. It was much more of a bull market product. But what we have that I'm very excited about coming out is we have been onboarding independent strategist teams, and a number of them have what I've been terming better than HODL strategies. So the easiest thing to do, the retail experience that everybody currently does, and is like still most of on-chain DeFi, is just I want to own token X and follow the spot price on it. And what a lot of these new strategies are trying to come to is, well, why don't we try and actually optimize building the largest position possible for your capital over time, rather than just kind of like the simple thing, which is just you buy some on a DEX and it sits in your MetaMask.
Yeah, I mean, to me, we talked about Yearn in the past, and also what was the one, Andrew, that's sort of like an aggregator for returns that we talked about in the context of like being an ETF. I'm trying to remember what that was.
Well, yeah, I mean, Yearn is obviously it's sort of like a yield optimizer.
Yeah.
There's token sets, which is like an ETF.
Yep.
Index CoOp as well.
Index, that was the one that we were talking about.
Yeah. Index is definitely a fellow traveler. My dream would be with Index. So what is Index? Index is, okay, you have a token that is, that you can buy, that gives you access to this underlying position. And you can
Yeah.
you could build index CoOp on top of Som. It'd be great.
Yeah.
I also like, I mean, we are trying really hard to convince the index CoOp people, because the rebalance function, like the trade function that underlies index CoOp, that trade function is that trade function is basically a multi-sig right now, right? Like you saw, like a small number of DAO members sign off on it. And if you ran that trade function on top of Sommelier, you actually would have like a strong decentralized execution story and a much stronger, non-custodial story than index CoOp has right now. And so we would really like, I would really like to see their products using Sommelier for rebalances. This is like, Sommelier is infrastructure. It is this infrastructure for saying, hey, we need actively managed strategies, but like, we don't actually just like want this to be like, a brokerage. We really want a decentralized protocol that enables this actively managed strategy. We want a story around, what if we were hit, like every member of the multi-sig gets hit by a bus, does this product still stay alive? If you do that, you've got decentralization. And I think Sommelier is like carefully constructed to like create that world.
So one thing we've talked a lot about on this podcast is just kind of like the future of DeFi and like the big drivers that are going to make it into what we think is hopefully long-term a sort of multi-trillion-dollar asset class. Obviously, sort of one of the things that drove a lot of the growth from start of 2021 to 2022 and when it hit its peak was just this proliferation of new chains that launched and each one kind of bringing new TVL and new investors to the ecosystem. Obviously, a lot of that has kind of unwind over the last year. I think looking at DeFi Llama, the TVL across all of DeFi hit $200 billion, and now it's down to about $60 billion in the last 6 months. I'm just kind of curious, what do you think is the next huge driver of TVL over the next, say, 12 to 24 months? And how, I guess, if you were to put a number on it, how big do you think we kind of get over time?
So I think like one of the things I just mentioned is like our Aave seller is kind of a bull market product. It's designed, it was a product that was like a product for the world of that, like, lending stablecoins is very appealing in a world right now. Lending stablecoins is like worse than owning treasury bonds in terms of yields. So one of the things that is, I think, without a doubt, a true thing is that DeFi right now is like populated basically by bull market products. And in order for DeFi TVL to recover, there's like this weird thing. It's like, okay, TVLs are down because it's a bear market. Well, I don't think that's the entire story here. At least that's not the story Sommelier is betting on. Sommelier is betting on two things. One is that like the DeFi product portfolio is a product portfolio that is very much crafted and born in an extended bull market, and that we believe that there are compelling products for flat markets in DeFi, that there are compelling products and we think we have a pipeline of products that like validate this hypothesis. But this is a big part of our story, right? I think the big part of the story is the DeFi ecosystem has to start delivering products that are, and I think Index CoOp is actually a great, I've been told it's Index CoOp. I don't know, maybe it's Index CoOp, I don't know. Scott Lewis was like Index CoOp, and like he's my like, Ethereum DeFi shaman. So,
I have to wait for the founder to say it on the podcast. That's the only way. That's the only way really to know. It's like Wi-Fi and Wi-Fi. I had to like go down a rabbit hole because everyone was doing it differently.
So yeah.
I love the idea of a sommelier. The concept of someone to help you sort of understand and pick through and make good choices versus, just randomly walking into the liquor store and buying.
Yeah, I mean, but like, it's like, how can anyone, I mean, that's like the practical answer to the question is like, if we want, if you, like, if you don't have like a full-time analyst staff that's like, sitting there and like, looking through the on-chain data and like trying to figure out, like, I don't know. I mean, it used to be that you could kind of figure out what might be good to put your money into in DeFi based on like watching crypto Twitter and following the right, anime avatar accounts, but like that's not really true anymore. Like you definitely hear like whatever token is getting hyped and is excited, like everybody's excited about GMX right now and everyone's excited about SudoSwap right now, but like is there really out there is hard to know.
Yeah, I mean, like constantly rotating out of one coin to the next coin. I mean, unless you're doing it as a full-time thing, it's difficult to stay on top of it. And even if you are, there's probably better ways to spend your time. Like in the end, in traditional finance, passive investing outperforms active investing the majority of the time. But that doesn't mean there isn't a role for active investing. It's just something where certain people with access to information and resources can consistently outperform over a long stretch of time. And I'm wondering, in the case of Sommelier, like, if I could allocate capital to a number of different users or people who have a track record that is an on-chain track record that I can sort of verify, then that seems like something that would be kind of interesting. And if as a result
I mean, that's
they take some carried interest or fee on those terms, and then that's something I think a lot of people would be interested in. And it reminds me again, Andrew, just the way in which, life imitates art, imitates life, the way that DeFi is looking at some of these long-standing problems in traditional financial services with a fresh lens. The idea that, not only are you democratizing access to this asset class, but you're trying to democratize access to all the different strategies in this asset class. That, in the case of traditional finance, at least, we very high barriers to entry for hedge funds and other, things that would require a lot of wealth or connections and so forth. So I find that really, really interesting. I love the idea of Sommelier, and I wonder if the idea that you started on Ethereum, because Ethereum is where a lot of those existing DeFi applications are and where a lot of people are currently using it, but the actual underlying conditions for building this in the long term may be on Cosmos. And it reminds me of the wine industry, which is like Ethereum's France, and they've been making wine there in France for many thousands of years, but the terroir in California might actually be better. And Cosmos is California, and you're building Napa Valley. I don't know. Is that going too far down the rabbit hole? Like, I just think.
I mean, this is our kind of our long-term thesis, right? The short-term thesis. So go through. So strategists on Sommelier, they get both base fees and performance fees, and they're sort of set on a per seller basis. So, when you propose to the Sommelier token governance that we should run such and such seller, you are sort of, and like that stuff gets coded into the smart contract. And so, we think you can make a lot of money as a strategist.
Yeah.
And we think the most valuable resource in DeFi is strategist intellectual capital. And I don't know, I feel like I'm getting some validation. I'm getting validation on this, just, chasing people down, trying to get them to build Sommelier strategies, is that, this not having this like decentralized execution piece is actually a big barrier for these strategists growing their business, because it's like, it's one thing to run a small fund for friends and families, but like a lot of them don't have the institutional structure and don't really want to build the institutional structure to go out and execute at scale. So that's like one. So the reason why I think that the intellectual capital around strategies and building strategies right now is 100% on Ethereum right now. That is where the intellectual capital is. And so to me, it's not just the TVL. Like the TVL is a big part of the story, but this really is a story about going and finding. And we are much more interested, and like we are much interested in more interested in sending SOM tokens to people who are bringing intellectual capital for strategies to the to SOM than we are, just like liquidity mining our way to like a massive TVL. So I don't think that's it's not it's not the moat. The moat is if we get this community of strategists who are all super excited about building on top of SOM, super happy, or like this allowed me to like go from managing, a few $1 million of capital that I've sort of aggregated from people I know to tens or hundreds of millions of dollars of capital. Like then we're, SOM is huge success and everybody's happy. So that's like one.
Sorry, yeah. One thing I wanted to ask, I guess, more just about how it works on the back end is how do you prevent sort of like front running and issues like that where I don't know if that's like an issue that you guys have sort of seen in practice. I know that happened with Index CoOp or CoOp a little bit as well, where
I don't have an amazing solution to the problem. Is like the honest answer to the problem. I mean, there isn't a magical solution. The initial set of strategies that we did are not super vulnerable to front running, but like some of these things are going to be, and we're gonna have to manage the problem over time. Is sort of, is a sort of short answer to the problem question. There's a lot that can be done with, there's definitely that, we can submit our order flow to Flashbox is probably like the next layer out of the system. That's probably the next layer out of the system just to constrain, to constrain front running. But like the protocol that's the downside of, that's like this trade-off around decentralization if you're decentralized, more people can see your order flow, further in advance. Now, the latencies on Sommelier between like a strategist saying, hey, we should do this, and it actually getting executed are, not huge, but it's going to be, a block or two on Ethereum. And so there's going to be exposure if this stuff becomes large. There's a lot of tools in the toolkit, and that is a problem that will exist at scale with success and scale. So, we'll have to, there's stuff you can do with enclaves and SGX and all this stuff, but it's an ongoing challenge, right? Without a doubt. I'm hopeful that there's kind of enough scope for building products where this is not crippling, that for us to sort of differentiate ourselves before I have to solve this problem from an engineering point.
Zaki, you said at the top of the show that
it makes sense.
2023 is going to be the year when this works on Cosmos maybe better than Ethereum. So how about some other predictions?
Okay, so like one thing I will just quickly say is like, so like we own our own instance of a bridge to Ethereum in Sommelier. Like we have an instance of the Gravity Bridge that we share with the team at the Gravity Bridge, the Grav team that like same design, but it's run by the Sommelier validators. One of the most painful pieces of our whole infrastructure is having to own your own bridge. Is to like have this bridge, and we have this like massive pull request that's like we haven't merged and haven't deployed for going multi-EVM, and like it's definitely a lever that we can pull if that's what it takes to capture the business opportunity. But having to have our own bridging protocol has been like one of our biggest cost centers, one of our biggest engineering headaches, one of our biggest things that slow us down. And so I'm like, one of the things that would be one of the most appealing things about moving to Cosmos is that we would be able to use IBC and specifically this protocol called interchain accounts, which has been starting to be more widely adopted across Cosmos. There's a whole bunch of liquid staking stuff using interchain accounts that's like launching today and tomorrow. This is a huge, so the interchain accounts narrative on Cosmos, which basically allows a program sitting on one chain to control an account sitting on another chain. So Osmosis doesn't need to know about Sommelier. It doesn't need to have Sommelier specific smart contracts or anything. You can just have LP, like an LP position, tokens, trading positions, etc., living on the Som, like controlled by code on the Som chain, and is able to reach out over IBC and trade, adjust its position, etc., on Osmosis, on Injective, on all of these different chains, right? And so this model actually is like much more scalable, much more exciting. I think interchain accounts are going to become, I think, token transfers were the first big application of bridges. I think token transfers will fade over 2023 to interchain accounts and similar protocols where you're, instead of sending the tokens between chains, it's really about, okay, I have control sitting on one chain, i.e. control of the account, the decision-making process, the rules for like trading and lending and all of these things. And then the actual trade execution happens on another chain where there's liquidity and stuff like that. And this, I think, is a huge, and we've built this architecture pattern for Ethereum out of the tools that were available to us in 2021, the Gravity Bridge, the Cosmos stack, all of this stuff. But like Cosmos is about to make this just like a ubiquitous part of the ecosystem in IBC. And I think that plus all of the liquidity, plus all of the new applications, suddenly is this incredibly powerful environment for doing DeFi. And I think we're very excited.
Terrific. Well, thanks, Zaki. That was a great conversation. Love to get an update in 2023, maybe when Cosmos flips Ethereum for DeFi attractiveness measured by not only TVL, as you said, but also intellectual capital. I love that idea of, which the protocol that has the human capital is the one that is likely to succeed.
Yeah.
Thanks again, man. That was great. And this will be, up in a couple of days. So that's all for DeFi Decoded today, everyone. Thanks for joining us. Zaki, great to see you. And we will see everybody next week. Take care.
Thank you, Alex.
Cheers.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.